Everyone. Hey, I just got off a call with a gentleman. I'm not going to call him a prospect, but the call is what prompted me to kind of put this video out to you guys. And what the gentleman kept saying is that he believes that insurance is a scam, and he doesn't have insurance. He chooses to go without because of his sentiments about insurance itself. So I want to explain a little bit about what insurance and what insurance companies, I guess, point of view is in this regards. To kind of, maybe clarify a little bit or be some clarification for you. Sometimes we get upset because you pay the premiums for something that can potentially be used, but that's the way insurance is supposed to work. So, best analogy that I can use is that of a stockbroker. Let's say that you are a stockbroker. You're looking for stocks to invest into. So you do your due diligence. You look into the company's prospectus. You look at the financials. Make sure that the markets that they're in, there's potential for them to grow. So that way there's going to be a return on investment for that investment you're about to make. Now, your primary incentive for doing this is not really to help the company out or to make sure that they stay profitable, help them out on whatever they're trying to do. Your primary incentive is to make money. You're doing it on a for-profit. You're hoping that the company will grow so that where your stock will add value or increase in value, I should say, and therefore you'll be able to sell it for a return on that investment. Same thing goes with the insurance company. The viewpoint's a little bit different. They're looking at risk. So if they choose to insure you, well, then they're looking at how risky of a proposition are you, right? How healthy are you? What type of conditions or health conditions are going on? What type of healthcare needs will you have in the future? And obviously, the healthier you are, and let's just stop there a little bit about what is healthy, right? Are you overweight? Do you have diabetes? Have you had any type of heart problems? Things of that nature would obviously put you at a higher risk pool than somebody who's very healthy, works out 3 or 4 times a week, whatever the number might be, and therefore it makes you, from the insurance company's perspective, a lower risk proposition, therefore a possibility of you being a more profitable investment. So I want to be clear that the same thing as you being a stockbroker and looking into a stock, your primary incentive is not to help the company out. The insurance company is looking at you in the same way. Their primary incentive is to make money as well. So, they look at potential clients that are going to maybe not use healthcare as much. That way, as your premiums are being collected, they're creating a profit. That's just the way it is. It's just a business, the American way. Now, health insurance is a little different, right? Because now we have the ACA. And so the ACA changed the rules a little bit here. Well, actually a lot. And now, basically, if you're the stockbroker, you have a law that's been passed where within those 6 weeks of open enrollment that is called under the healthcare side of things, guess what? You have to take every stock. Whether it's a high risk or a low risk, it doesn't matter. If you want to participate here, guess what? You have to take every stock that applies for it. So the stockbrokers have done is, or the insurance companies, they said, you know what, fine, we'll take every stock, but we won't pay for it until there's a 200% return on that stock. So let's put that back, and you know what, I want to add here that I'm not a stockbroker. I don't know anything about stocks. I'm just using this as an analogy. So please don't misunderstand me. I'm just using this to try and explain a little bit of, maybe give you a different perspective of how this works. So an insurance company now, what they did is they increased deductibles. You used to be able to buy health insurance for $500 deductibles to a $1,500 deductibles. Those were the ranges that we had before the ACA. Now you're looking at $5,000 to $10,000 deductibles. And what they're doing is basically, well, we know that about 95% of healthy Americans will never spend $5,000 worth of healthcare expenses. And so thereby, they're hedging their risk, right? They're looking at people who are healthy who get insurance, get health insurance for their families, go into the wellness plans, or I'm sorry, the health benefits, the wellness benefits to get the mammograms, colonoscopies, yearly checkups done, which again add lower risk to those potential clients. In the same way, which a stockbroker looks at the risk of investing into a stock. So just remember that this is a business. I mean, the insurance company's primary goal is to make money, and they're evaluating from that perspective. And if you understand that, then there's two things you can do. Number one, you can make yourself lower risk, right? Eat right, exercise, make sure that you stay healthy, because then what they do is they look at the history of how often are you needing healthcare. And that would also make you available, or make certain plans available that normally other people who are not as healthy may not have access to. And the second thing is shop around. There are plans out there that are available to you, especially if you are healthy. They can definitely cost you less and give you far better benefits than what's available to the overall population. So be smart about that. Check out with people that are in the business and understand what's available, and talk to them. And not just people that specialize on the ACA, because that's not going to help you. Look at somebody who looks at the private side of things, that looks beyond just short-term plans, and make some of these plans available to you, and be able to take the time to explain them to you. Okay? Well, I hope that helps. At least maybe curb some of those ill feelings that you have towards insurance companies. And let me know if I can help. Take care.